Lacey, I have a question for you. If you have a $100,000 line of credit with the bank and you borrow from it for whatever reason, are you going to make the payments back to that line of credit?
Yes.
Okay. And you want to do that not only because an incentivization from the bank who lent that money to you, that if you don't, they're going to wreck your credit and they're going to charge you more interest as the balance grows, but you're also going to pay it back because let's just say you use it for operating expenses. And these operating expenses, they're kind of well known. Every single year you need them to do business. If you don't pay it back, you're not going to be able to use that for your operating expenses the next year. We all know that. That's a general well-known thing that we've been trained into, but it's very handy to have that line of credit because typically that line of credit, even if it's unsecured, typically is less interest rate than borrowing from a $100,000 credit card. Now let's talk about what we do, Lacey, in terms of what we help people do, which is help make lending at the bank plan B rather than plan A. I think one of the hardest things for most people who know nothing about what we do, and even for clients who are our clients, it takes time. The mindset, it just takes a lot of time getting used to the idea. It's like, hey, how would you treat your own line of credit?
Yeah, if we know that if we use our line of credit that the bank has given us, we know we have to pay it back.
What will happen if you don't pay it back? Okay, number one, you're going to pay more interest. Number two, you're going to start getting a bad credit rating. And then if you start getting a bad credit rating, like especially in the industry of cattle or farming, it's always been intertwined where you want to keep doing business with a bank.
Well, yeah, because if you're not lendable to, and you're relying on that line of credit to be able to operate throughout the year, if you can't operate, you're up a creek without a paddle.
That really incentivizes people to make those payments back because it doesn't just impact the availability on your line of credit. It impacts pretty much everything else in terms of being able to get more money down the road. It's a good reminder all the time. And I think a lot of people in our industry, we hear this all the time, but the way that we think truly, truly matters. And we do have to question what it is that we're thinking about all the time. If we are incentivized through the fear of not being lendable to, and we think we're up the creek, then there's something wrong with staying in this financial lifestyle because it doesn't sound empowering to me.
You're exactly what the Bible says. You're a slave to the lender. Typically, if you have a line of credit, they attach a pre-authorized debit to your bank account and they're withdrawing that interest payment every month on the same day, no matter what. So they kind of like take the bull by the horns right from the start. They're in charge.
Everyone knows they want to stay in business. They want to have a profitable business. Everyone's intention is to prosper through good times and bad. And the path is if you don't get off of it and you continue to rely on the lending institution as your first plan and not your second plan, then the trade-off is you have to play by their rules. And from my understanding, especially like from everything that's going on online, right? Like I think like when it comes to lending and money, I think that a lot of people feel like they don't have any other choice. So you just tolerate it because how are you going to change that relationship? It almost feels like too much. But everywhere else, we can honestly now say, yes, we have a way where we can show you that it's quite possible to get off that path and onto another one. We show you case studies in that book, Farming Without the Bank, Canadian version. In the very first case study, we show you how is it possible to sort of get off one path and get on another one at the same time. What does the transition look like? Because it is possible, but I know that it's like, well, show me a way, like show me the money, show me how it's done. We show you in the first case study conceptually and how everyone gets there and how quickly everyone gets there. It's different. So what are some of the things that we encounter with our clients, even though they've learned with us, they've read the book, this mindset that we grew up with, so hard. Like I have that mindset. It doesn't matter. I grew up in the city. We're all trained, whether you're in agriculture or not. But the mindset is so strong that a lot of the times we get feedback. Like, what is our feedback that we typically get?
If I borrow from my policy, well, then that's just another debt hanging over my head that I have to pay back. Is there a policy loan balance? Yeah. But what's more important is the rules that you have to play by and who created those rules. It's so hard for people to grasp because it goes against everything we've been taught. It's a conversation that we have all the time where like, yes, then you are going to have this policy loan balance, but we're going to service it. We do your line of credit at the bank. And I like what I often hear you say to clients or to even if we're at an event and somebody comes up and says, hey, what do you do? I like the analogy that you use. Hey, it's like having a line of credit, but you own it and your limit grows every day. That in itself is foreign to people.
Mhm.
And so I think we do get stuck in that. And our clients, like, even if they're using their policy, sometimes there can be that hesitancy until you reach that tipping point, and the light bulb comes on. I've created this 5, 6-figure, 4-figure, whatever it may be for you, pool of capital that I own and control.
Mhm. It's stressful to say the same. It's also stressful going through the transition of getting used to the fact of like owning your own policy. Like it always feels uncomfortable when we think we owe something, even if it's to ourselves. Like I've heard so many times from a client, I don't like having a policy loan. Like it makes me feel really uncomfortable. It stresses me out. They haven't quite had that light bulb turn on going through a moment where it's really saved them. Really saved them from even more stress than they would have had if they were still heavily involved with the banks. I think it's important to share that so that, it's not just all rainbows and butterflies and unicorns over here, right? Like the transition can be difficult to really get to the other side. And part of the reason why we're having this conversation today is because Rob Wonder, if you haven't checked out one of our previous podcasts before, he's been practicing infinite banking now, since 2018. And he wanted us to actually share this with you. It's like really understanding the flow of cash. Our money has to flow somewhere anyway. It's just how are you doing it and who are you doing it for? Is it actually really working for you? No, we're not talking about investing. We're just talking about optimizing the flow of your cash.
Right. So Rob was a guest on our podcast in episode 41. So if you go back and check that out, then you will get to meet him. But he sent us a message and just says, hey, I think it would be a good idea to touch on capturing the dollar and sending it to work for you for your lifetime. So sending it to work and it works for you for your entire life, and then reusing it. And this is the key, replenishing it. So Rob's using it and then he's replenishing it so he can use it again so that it's still there. And then he also goes on to say, if in time we can use our own money in a debt situation, so if we're going to move debt from a traditional lender over to our policy, then that is a good use of funds. I think you guys should touch on that. It's not necessarily that debt is a bad thing. If we can own it, like mic drop, we can earn it. Why not use it and grow?
Yeah, exactly. Owning the debt. We kind of already have been speaking about it. It's not like instead of being a slave to a lender, if you have to, like anytime you borrow any money outside of what you have saved, I don't think that it probably will happen many more times before the end of your natural life, right? So, so if it's a repeatable thing that happens in your life, like most business coaches say, if you have to do it more than once, create a system to deal with it. Like we brush our teeth every day. We have a system, and now it's unconscious, of the way that in which we brush our teeth. If we have a system for how we finance everything we buy, everything becomes a lot easier. But you sometimes have to question the system in which you're doing it from. So if you have to have debt, isn't it better to be the owner of your own debt instead of having someone else own your debt? Because then if you own your own debt, then you get to set the terms and conditions.
Absolutely. And I think that in itself is such a foreign concept to people, because if you need to purchase something that you don't have the cash for, then you go to the bank. That's just the norm. If you need a vehicle because your vehicle died and you're in a situation, you go to the dealership and you finance a vehicle. People do it every day.
So here's more context. It started off somewhere just like the cycle of how you buy a car, right? It takes a long time to break out of the habit of borrowing money to buy a car until you get into the habit of saving for it first and then purchasing it, right? So very much the same. It's like at some point there is I think a lot of people also ask, okay, well, I need $100,000 today. So yes, you would have to go to a bank if you don't have $100,000 today. And so does that mean, well, how do I borrow from myself? So there's that gap in knowledge about the time it will take to build your own system in which you can become the lender of all of your own things, whether it's personal or business.
Yeah, it does take time. And Nelson talks about that in his book, the capitalization phase of the policy. And I think it's truly inspiring when we go down to the think tank with the Nelson Nash Institute every year, because David gives us an update of their family and their system of policies.
Mm-hmm.
And this year, I thought it was so cool with when Lee, she had a picture and she purchased a new vehicle, and it was a fancy vehicle. It was nice. I'm like, oh, girl, that is nice. But it was purchased through a policy loan. And I thought, like, how inspiring. Because I sometimes feel like we can feel limited if I have to save X amount of dollars to buy a car, this is my income. It can kind of feel like a blow sometimes to be like, okay, so I can only afford X number for my car or whatever. But it's like, no, like, I don't know, put your money to work for you and make a plan and shoot for the stars. Like, if you want a Lamborghini, go for it.
Mm-hmm.
But I think like any way we can empower ourselves financially is a good thing.
Well, especially when there's so much, especially in the more that I work with the agricultural industry, and of course we have talks all the time. So I do get an inside view so much, and it's like there's just so much more uncontrollables and so many more bigger price tags to your industry than in most other industries. It's not all about, oh, who's got the lower interest rate. This is not that conversation. It's really about using the mindset of the infinite banking concept plus the financial vehicle used, the way that you implement it and integrate it into your life so that you can experience more financial control on a day-to-day level. And especially when financial curveballs and financial headwind come your way, that's when it's really going to show up the most. Not necessarily when things are going great, but when things are not going so great. This is where I feel like what we talk about, what we advocate for really, really shines the most. You're talking about Lee, who got a car. I mean, that could be out of her own system, but that's also, I think it's actually out of the family system right. Of policies where, hey, let's expand on this even further. Why is this also so much more valuable beyond control is that it's something that you can use to help keep a lot more money in the family, keep the stress down from having to be a slave to that lender. Lenders come in different forms. It's like the credit cards, the banks, the government. Anyways, so coming back, I'm on a bit of a tangent to address Rob's comment. He talked about making it work, like using your own money that you have saved to pay off debt. That is worth talking about. There's something about that particular piece that we have to talk about, Lucy. The compound growth. I feel like that's a gap right there.
Right. Yeah. So he says like capturing the dollar and sending it to work for you. So he's referring to compounding.
Mm-hmm.
And I don't know if it's just what the algorithm is feeding me, or just because we talk about compound growth all the time in our business. But like compound growth is something that people are talking about on the daily. I think when we talk about our dollars, we don't necessarily think like, oh, well, all or most of it that comes in can be put to work for us. And I think is worth talking about because, you've seen that illustration where it's like, if you take a penny and you double it.
Yeah.
And double it, and you go all the way 30 days. And
yeah.
I can't remember, how much you would have by the end of 30 days. But that is essentially what you're doing when you put your money into your policy. It is compounding inside that policy every single day for the rest of your life. And something that always has to be explained, or most times, is Okay, but when you want to take a policy loan, okay, I want to take my policy loan, so I'm taking my money out, but how does it continue to grow? And that's a big misconception, because you're not taking your money out.
Mm-hmm.
It's staying in there. It's staying in there to compound, and the insurance company is loaning you their money. And so that's why this concept and these policies are like mind blowing to people when they learn about them, because it goes against the grain. It goes completely against the grain and breaks all the rules that we have in our mind about finances.
So, what I'm showing here on the screen, like you're probably, I don't know if you're listening to it, but if you can hop on to YouTube and check out this particular moment, and I'm essentially showing a visual of what it's like to finance things when you're using the infinite banking concept. A huge main difference of like a line of credit with the lender versus a line of credit, in quotation marks, okay, it's like a comparison, but like owning your own line of credit, it's very similar in that sense, because the limit on that line of credit grows every single day. So that's not like the traditional line of credit that we're talking about. And so the power of compounding is working in your favor, because even though you are using in your life, your money grows as if you never took it out, as Lacey was explaining. We have a whole intro to IBC video series that really goes into the mechanics of like the behind the scenes of how and why that all works, right? If your mind's going there. But essentially, this is like a quick visual to help you grasp the idea of what we are talking about and why it's worth it, and why running your money through this particular type of contract really helps you in the long run to own all of your own debt. And so keep learning with us. I mean, we can't touch on every single thing to help make everything make sense, but I hope that makes sense.
Yep. And not even not just the financing piece of what we get with these, when we put a policy in place. It's the impact that we leave to the next generation or our loved ones in the form of a death benefit. And death benefit has been on my mind quite a bit lately, just because it seems like we're living in a time where there's more diagnoses. Well, I think also social media makes us more aware of the things that are going on in the world than we used to be. And so, you see young families left behind. One parent passed away, a spouse passed away, somebody gets sick. And so death benefit has been on my mind, and how important it is. Just yesterday, so yesterday as of the day of this recording, it is May 22nd, NASCAR driver Kyle Busch passed away. He's 41 years old. He's already in the headlines with some lawsuits because of a universal life policies that he had. And so it's just the impact that the death benefit can have on loved ones, and the importance of making sure that they're taken care of. And I'm not sure who said this. I think it was when I took my training to get my life insurance license. The teacher said, if you owe someone or love someone, you need life insurance. And I thought that, I don't think I'll ever forget that, because it is true. We don't know what life's going to throw at us. We don't know when our last day will be. But if we can do the responsible thing and look after our affairs and make sure that should something happen, we're all going to pass away eventually. Should something, or when something happens, that our loved ones are left with something to move on with.
Mm-hmm. Well, and with that all being said too, I think leaving a death benefit behind is so important. And it seems like it's the cherry on top of everything else that we can do while we are living. Because believe it or not, you can live your life insurance in a way that really empowers you. And that's what Lacey and I are really here to talk about. That's why Rob also wanted us to share that with you, because I know it's on all of your guys' mind. Like there's just so many things to be concerned about, so many competing priorities. And seriously, if you can really take a good look at this, take the time to look at this, you can make how you handle money one of the last things you worry about.
Yes. Okay, let's touch on that. So we have to do continuing education credits every year in order to be able to renew our license. And one of the courses that I took this year was on mental health. And you and I have always said we feel that our mental health is directly impacted by our financial health. Guess what? It was in that course. The state of our financial health determines the up and downs of our mental health. And it also talked about how mental health is defined differently than mental illness. We just talked about like mental health. If you can look after your finances and you know that you're in a safe place in your finances, your mental health shoots up. And I'm like, yes, like this is what we've been saying. Like, say it louder. I am here for it because it's true.
Yep. And I think when you have great financial health, which correlates with better mental health, right? Like I think we're human. We're all going to have our challenges. I don't think any human can walk through this entire life without some level of stress of some kind. But again, if finances doesn't have to be one of them, I feel like number one, it can really help us be a lot nicer to each other.
Yeah, it can help you like weather the storms that come in life. If it's just one less thing that you have to be stressed about. But also, good financial health doesn't come automatically. I mean, I feel like I'm quoting you lots. So you've taught me a lot. You should be proud. Good financial health comes with making those small, good choices every day with our finances. And then ultimately we end up where we want to be. Good choices daily in our finances will compound into something that we want. Bad choices in our finances daily will compound into something we don't want. So
kind of like what we eat. I was so close to getting a honey glazed donut. You have no idea today. So close on my walk. So close. I ended up getting a watermelon popsicle.
Nice.
Yeah.
Because you have to ask yourself, what do I want more? Do I want the honey glazed donut more than I want to not feed that sugar craving?
Yeah.
And that's not always an easy choice. It's not always an easy choice to make the best financial decision either.
No.
Like we all do it. I don't know. Everybody has a weakness, right? Yesterday I bought a vacuum cleaner.
Yeah. And did you need one?
Yes, because
that's different.
Yeah.
But it's kind of like the difference of like, did you need that sweater? Did you need that shirt when you already have like 20 shirts in your closet, right?
Yeah.
But yes, money is an emotional decision. Anyways, we're getting off track here.
Yeah. So I think we can sum this episode up in a really good way. It's like, look, we're all going to be adults and we're going to just do some adulting here. And we're going to look at your picture. We're going to decide what your goals are, where you want to end up. And we're going to do that hard work to get this all set up. And then we're going to continue making those good choices that compound into where you want your life and your operation, your family to end up in years to come. So that's your homework, guys. You know where to start. ranchyourway.com. Your journey starts with your copy of Farming Without the Bank, but it does not end there. You're going to get the audio and the paperback copy. Head over to iHeartRadio, Spotify, Apple Podcasts, leave us a 5-star review, and you can also watch us on YouTube.
And share your ideas like Rob did, and we can talk about it.
That's right. If you want to hear something on the podcast, we care at ranchyourway.com. Send us your ideas. We want to hear them.
So glad you leaned in with us on the Win A podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.